Megapack factory going up in Shanghai, the Giga Nevada plant going to get to 100 gigawatt hours per year, and that a portion of that will be for stationary storage. So if you start doing the math on some of this stuff, it gets really large. We may have an inflection point where analysts start to take the energy side of the business more seriously.
That was Matt Smith, Vice President of Equity Analysis at Halter Ferguson Financial Incorporated, a firm providing financial planning and asset management. And Matt being bullish on Tesla is a big thing, especially since even before joining Halter Ferguson Financial, Matt was a managing partner at Good Soil Investment Management, a hedge fund focused on disruptive innovation. Matt also has extensive experience in the energy industry and spent time working in valuation and investment banking earlier in his career. Simply put, Matt Smith is more than well-versed in the industry, so his words are worth heeding. And what he said in a recent interview with content creator Herbert Ong, whose content is focused mainly on Tesla, is worth knowing.
So
yeah, you're so heavily involved with Tesla. So you discovered in 2009. It was kind of interesting that you said that you invested in 2017, because that was probably the most riskiest time. It was just like a little bit of a dichotomy, right? Because I'm a startup guy, so I love to discover companies that are early on, which is 2012. And then 2017-18, it was flat for many years. There was talk about them going bankrupt, and they really were. They almost went bankrupt. And that's when you thought, wow, this is a good investment. And then you saw that they're beyond that. And then I get the whole thing about once you saw that they were able to truly ramp and their advantages of the factory, that I get. But you know what I mean? 2017-18 was actually the nadir of them as an investment, but that's when you went in.
Yeah. So, I was just so fascinated with the company. And, in my job, my company actually had a Model S that they would let their employees drive from time to time. And so it was probably 2016 or something like that. I got to take the company Model S for a couple days, and it just blew my mind. I was just like, oh my gosh, this is the future. I was nowhere near being able to afford a car like that, but I was just like, this is like the car that I want. And I cannot wait for them to launch a lower priced car. And everything about this just makes so much sense. It's such a better customer experience. It just I kind of became an addict for Tesla content and information once I had that initial experience.
Despite this, however, Tesla's share of the U.S. electric vehicle market fell to 50% in the third quarter, down from nearly 65% for the full year in 2022. Although Tesla cut prices on popular models, which caused its vehicle sales to rise almost 20% in Q3, it wasn't enough to sustain market share as competition grew. New competitors, including both EV startups and traditional automakers such as Hyundai, BMW, and Mercedes that have released their own electric models, have gained at Tesla's expense. EV sales in the United States jumped to more than 300,000 for the first time in the third quarter, but industry leader Tesla's market share slipped to the lowest on record, a recent report by Cox Automotive showed. On that note, Tesla now dominates just half of the market, down from the 62% it held in the first quarter, despite a price war started by the Elon Musk-led company to solidify its foothold in the competitive EV arena. Still, the market firm claimed that Tesla could reverse the downward trend with the launch of its Cybertruck electric pickup truck, which is set to be delivered to customers in the current quarter. Playing catch-up, other automakers have been aggressively cutting prices to counter a tough demand environment triggered by high inflation and rising borrowing costs. Higher inventory levels, more product availability, and downward pricing pressure have helped spur continued linear growth of EV sales in the U.S. market, Cox said. The price war started by Tesla has brought average EV prices down to $50,683 in September, down from $52,212 in the prior month, Cox added. Total EV sales for the third quarter rose nearly 50% from a year ago and accounted for a record 7.9% of total industry sales, the report showed. That said, it is worth noting that Rivian Automotive handed over more cars in the third quarter than analysts expected and reiterated its annual production target of 52,000 vehicles. Tesla, meanwhile, missed market estimates for deliveries in the third quarter as planned upgrades at its factories to roll out a newer version of the Model 3 mass-market sedan forced production halts. Earlier this month, industry analysis firm Canalys said that while Tesla is dominant in the United States, there is an increasing demand for a wider range of EV options to satisfy the growing interest in electric vehicles, and that makes investors immensely bullish on Tesla. And that applies even though Tesla missed out on Q3 delivery expectations. Tesla reported 435,059 deliveries for the third quarter and production of 430,488 vehicles. It is notably a result that missed Wall Street expectations and was nearly 7% lower than the previous quarter. Tesla said planned downtimes at its factories led to lower production and delivery numbers. A sequential decline in volumes was caused by planned downtimes for factory upgrades, as discussed on the most recent earnings call. Our 2023 volume target of around 1.8 million vehicles remains unchanged, the company said in its announcement. CEO Elon Musk had warned during the company's second quarter earnings call that production and delivery numbers would be lower due to the upgrades. Musk said at the time that the company was still targeting 1.8 million deliveries in 2023, a target the company reiterated. On its last earnings call in July, Musk cautioned that Tesla would continue to target 1.8 million deliveries this year, but expected third quarter production to decline slightly following summer shutdowns for a lot of factory upgrades. Tesla has delivered 1.32 million vehicles so far this year, leaving a 480,000 sales hole to fill. Wall Street was expecting Tesla deliveries to reach 461,640 for the period ending September 30th, according to a consensus of analysts polled by StreetAccount. An independent Tesla researcher who uses the handle Troy Teslike on social media was expecting deliveries of 441,000 vehicles. Tesla's head of investor relations, Martin Vicha, sent out a company-compiled consensus to select investors, some of whom shared it publicly on social media. That number showed Wall Street was expecting around 455,000 total deliveries, with a median estimate of 453,128 deliveries for the quarter, based on 25 analyst estimates. In late September, Wedbush analyst Dan Ives, a longtime Tesla bull, wrote that he expects 3Q deliveries over 440,000 would be viewed by Wall Street as good enough given recent whisper numbers and longer factory downtimes. We are now set to be entering the next stage of growth for Tesla globally, with the Model 3 refresh front and center in China and the Cybertruck production set to kick off beginning around Halloween, Ives wrote. Before that, New Street research analyst Pierre Ferragu, on the other hand, wrote that he expects Tesla to deliver 438,000 units, 5% below the consensus view. However, Ferragu sounded an optimistic note. We anticipate a strong sequential improvement for Tesla in the fourth quarter in both deliveries and gross margin, Ferragu said. For context, Tesla groups its deliveries into two categories, Model S and X vehicles and Model 3 and Y vehicles, but doesn't report individual model or region-specific numbers. Deliveries are the closest approximation to vehicles sold reported by the company. Tesla slashed prices throughout the third quarter on its inventory vehicles and existing models, which put pressure on competitors to follow suit. Additionally, Tesla revealed a revamped version of its Model 3 sedan, dubbed the Highland, with both new exterior and interior features, and started selling it in some regions outside the US. The interior of the refreshed Model 3 includes touchscreen displays for rear seat passengers and ventilated seats among other items. The vehicle is sold with a long-range battery option that gets about 390 miles or 629 kilograms per charge. More than that, artificial intelligence is driving more than just cars and robots for Tesla stock. Tesla's advances in the space are fueling optimism for the company's investors who believe its next level of growth will be built on AI. Charles Harris, portfolio manager at O'Neill Global Advisors, told Investors Business Daily IBD Live Show that he remains bullish on Tesla stock. He attributes the potential upside to what he sees as significant advances Tesla is making in artificial intelligence and how it's being used. He points to a self-driving test broadcast by CEO Elon Musk on X in August. In the demonstration, the vehicle was able to use its training to determine what was on the road and react accordingly. Harris sees an upside in Tesla stock using the same technology to build its smarter robots. He points to recent demonstrations where a Tesla robot reportedly used a version of artificial intelligence to sort Lego toy bricks by color. If you can train a car to drive, then you can train a robot to vacuum your home, wash your dishes, make pancakes, do whatever, he said. I'm a swing trader, said Harris. But using Apple as a precedent, I never imagined Apple would turn into what it turned into. I think there's the same potential for Tesla stock. Overall, Tesla has a lot going for it. The EV side of the business, the energy sector, and AI among others. Subscribe for more.